is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy commo! I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Always do your best. Surrender and let go of the past. This is a great card. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go in the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We have the Dow Industrials up 201. NASDAQ is up 126. S&Ps are up 28. When we look at the percentage moves out here, folks, excuse me, you have the NASDAQ up 1.4%, the S&Ps up 0.8%, and the Dow Industrials up 0.7%. Gold contract down $5.70, trading at $15.77 an ounce. We have silver off 35 cents, $17.65 an ounce. Light sweet crude, oh man, it is pounding this low with volume. You're down $1.54, $50.02. Looks like light sweet crude on its way to $45. That's how it's set up. Notes and bonds, you get the 10-year down 4 ticks, the 30-year up 4. Now, the note and bond market, folks, is pretty incredible what happened out here intraday today. If we take a look at the note and bond market, what you're going to see out here is that on the 10-year, bottom line is that you got down to a low today of 131.04, totally rejected lower price. And now what you're doing once again is that you're going into your highest swing point with monster volume. We've already done 2.1 million contracts inside the 10. If we go take a look at the 10-year yield, what you're going to see out here is that we hit a high today of 1.57. We're at 1.52 right now. This little baby, you talk about a setup, man. This is, we are going to go challenge the all-time low and the 10-year, and the all-time low right now, I believe, is 1.30. And 1.3180. That was the low that was established out here in July of 2016. And if we break that, baby, guess what? You're going to basically flat rates, and that's pretty intense, man. I mean, but that's projection-wise, that's how that's set up. This has been a one-way move inside the note market, inside the bond market, meaning higher price, lower yield. King dollar. King dollar's got caught a bit out here. King dollar went down hard on Friday, snapped right back out here today. Bottom line, on Friday, what you did with King dollar, you got from a price point of 97,968. You go down to 97,354. You came right back. Now, that being said, what King dollar has not done, and is still quite a way away from, is getting back inside its higher range. What King dollar had done is this. King dollar broke down the first week of December. It broke its uptrend, and it did break that uptrend with conviction. In order for King dollar to get back in the higher trend, you'd have to basically go up about 2 more pennies. Right now, we're at 97,819. The trend, the top of that trend is 99,561. So we'll see if it can get any juice up there. Thus far, bottom line looks that we still just have a counter trend bounce. What we do have inside the gold market. So what gold is doing out here, bottom line, gold refuses to back down also. Gold rejected lower price out here today as it, let's see, GC, where are we? March. No, we're not in the March yet. 1 second. Sorry about this. Here we go. Okay, so we're in the April contract. Gold hit a low today of 1573. You're trading 1581. A rejected lower price. It is building cause to go after the B point again. The B point in this contract is 1595. We hit 1598 today. You backed off. Bottom line is that you're still pushing that B point with volume. This is in a complex ABC structure on the way up right now. What that means, folks, is this, is that on the 8th of January, we got all the way up to 1619. It had taken out your swing point of 1595 and had volume behind the move. However, you gave it up on price. When you take out a swing, you give it up on price. Most times this goes right back up there. Bottom line, we'll see whether it has enough juice in order to basically take out this 1595. Today, you got up to 1598, didn't have enough in it in order to basically stay up there to get over that whole area. Some of the higher volume equities out here in this market, and this is going to be a much lower volume market than we had on the way down on Friday. You get Tesla's the animal. This is like so amazing. It's just crazy. Up $112, trading $762. If you get over and we take a look at this, what you're going to see, and this is pretty serious business, that you still have 17.5% short interest in the equity. And if we bring this back, you're going to see Tesla on October 23rd was trading $251. Just it is what it is. Bottom line, going much higher. It had a news article in Barron's over the weekend. Analysts, dreaming that it's going to go to $7,000. Bottom line, you had another upgrade. But what really put the kick in Tesla was when Panasonic came out with the statement that their battery factory is already in positive territory, making money. This is way before this battery factory was supposed to be making money, folks. And the bottom line is that why? You get the aspect. In fact, what they say. Let's see. So earlier today, Panasonic, which makes batteries for Tesla, its jointly owned battery operated in Nevada, said the business turned profitable in the quarter that ended December 31st. A rapid increase in Tesla's output helped push the business into the black. Panasonic chief financial officer told reporters in Tokyo. So that's a big number. Of course, they're in a different time frame, but if you do take a look at Tesla, what you're going to see is that acceleration was just fast and furious. Tesla had opened this morning at 673. Bottom line went sideways for a bit and then just took off like a rocket ship at noon from 722 all the way up to 786. So big numbers. Oil and oil equities, whole different ball game. What we have with the oil equities out here, you got ExxonMobil down $1.67. You're trading $60.44. This has broken its consolidation. This is serious business. Exxon looks like it's on the way down to 56. We'll see how it handles that 56 area. And what you have had is that these large integrated oils, no doubt, have been leading the price of oil down. The large integrators have been coming down for quite some time. You stay right there, folks. We're coming back with our man, Mr. Dave Mazza. Dave is the managing director and head of product at Direction. They just had a huge conference, meaning the ETFs, last week. And, of course, we're going to talk about China. We got so many calls last week when they were trading the Direction shares in the United States when China was closed. Coming right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now up 172. We get the Nasdaq up 116. S&Ps are up 25. Let's go over to our man, Mr. Dave Mazza. Dave is the managing director, head of product at Direction, and you can check out Direction, and it's spelled DIREXION.com. Of course, you can be right on our webpage at TFNN. Just hit the Direction banner. Dave Mazza, welcome back to TFNN.
Hey, thanks for having me back.
I'm telling you, man, I love that you're on today. So I want to talk about the ETF conference you were at last week, but what I'd like to talk about first is that, so China's closed, right? We're getting calls in here last Thursday and Friday, and it was so cool that the audience was picking up on this so quick, right? So let me ask you something. And the calls were about Chad and then yin and yang, okay? So can we start with Chad, right? Because what happens, folks, is that just go to the website. You can see how these work. And what I was trying to figure out, they were buying it because they felt that, okay, the market's down. What is the correlation? And when we look at Chad, now the markets are closed in China, right? How do you guys turn around and say it almost, when I was looking at the trading, it was almost like the option market, that there were so many people in it that it stayed like where it was supposed to open this morning. But like, how did that happen? You know what I mean?
Yeah, no, exactly. One of the most interesting but in the weeds components about ETFs in general, and then that becomes even more important when we're talking about leveraging ETFs, is that the term is price discovery. And ETFs are actually able, in some cases, to lead price discovery in markets that are closed. And this really was exemplified last week.
It was.
So we know the A-share market, which is just local Chinese companies in Shanghai and Shenzhen, were closed. But to your point, our ETF was actually tracking very well where the implied price would have been. And what does implied price mean? It means we can look at other markets that are related to China. So those would be Hong Kong shares or H shares. Those are Chinese companies that trade in Hong Kong, and then do a conversion for the currency. And last week, by and large, ETFs, I'll use the term, traded beautifully, meaning that they traded in expectation of where markets would open. So we actually saw the local market catch up, if you will, to where ETFs were pricing. The fact that markets would open down in China locally pretty significantly.
And folks, if you're looking for the symbol, this is so impressive, it's amazing. So if you're looking for the symbols, and these are the ones I'm familiar with because we got the calls in last week, you have a 1-to-1, which is CHAD, and the CHAD, I believe, is a 300, right?
Correct, yes.
And then you have the triple, okay, which is the yin, Y-I-N-N, and the yang, Y-N-G, which is based off a different indice, but I love how you do it, meaning the weighting structures, right? That's inside the China bull and bear, 3 times shares.
Yeah, correct. So let's talk about the Chinese equity market in the weeds for a second here.
Yes.
So historically, most U.S. investors, in fact, most non-local Chinese investors, were only able to access Chinese companies listed in foreign markets. Most of them listed in Hong Kong, but of course we know Chinese companies list in New York, or they can list in London.
Yes.
So Yin and Yang are focused on the largest Chinese companies that trade in Hong Kong. Now, Chad and Chow, those are focused on the CSI 300. So that's what's known as China A shares.
Okay.
So those are the largest Chinese companies, 300 of them, in fact, that are traded locally in China.
I see it. I like it, man. Pretty amazing, I'll tell you. And everyone, of course, is always looking for an edge. And so when it happened, I was used to the yin and yang. I hadn't been used to the Chad, but I'm glad people caught on to it. They caught on pretty quick, man, which I thought was pretty cool. In general, meaning the education value of this ETF structure in general, I think, has gone up dramatically. So if we can switch gears, I know last Monday, I believe that's one of the biggest ETF conferences in the world that you were at, right?
Correct, yes.
So can you tell us a little bit about the changes that are happening in the ETF market? My understanding is that regulation-wise, we got a lot of changes that are happening, right?
Yeah, so I think the biggest takeaway for most attendees of the conference, especially those that have been there for many years like ourselves, is that we saw a lot of unfamiliar faces. And all that means by that is that a lot of traditional active managers were at this conference because most recently, the SEC has approved a modification of the ETF structure for something new. And these would be called non-transparent ETFs. So meaning an active manager who may not want to show their holdings and because they believe that, of course, they have an edge or that they want to be selecting securities without alerting the marketplace about this, could launch ETFs that only disclose their holdings on a less frequent basis than ETFs have to do now, which is daily. So this is a pretty interesting development where we're going to see a lot of new launches from your traditional active managers. Now, of course, listeners on the phone, time will tell if these catch on.
Yes.
But it's going to be a big trend that we see in 2020.
Now, Dave, when I read about how this is going to work, folks, and this is really intriguing, and I don't know enough about the mutual fund market. Are they going to have to disclose what's in there like once a quarter or once 6 months? Is there a number at this point that they're going to have to disclose what's inside them?
Correct. So here's what's different is like traditional mutual funds disclose their holdings on a quarterly basis with a lag.
Okay.
That's the same with this structure.
$45 lag. Yeah, 45.
Exactly.
Yeah.
But what's different is that some of the structures will allow fund managers to have a proxy, meaning that they select a certain number of securities that would be in their holdings to use to publish to the market on a daily basis.
Okay.
Other structures are almost completely untransparent, where you wouldn't have a lot of insight into what the fund manager is holding. So this really comes down to the idea that the ETF structure is beneficial relative to the mutual fund. And now that's debatable. But the idea is that the ETF structure, it's a lot cleaner. There's no 12B1 fees or transfer agent fees. So maybe that if we believe active management is finally coming back, people will, as they continue to put more and more ETFs in their portfolio, they'll want an ETF vehicle for active management.
Interesting, man. It would seem that, like, it's really hard for me to wrap my head around that I'm buying something and I don't know what's inside the ETF. Do you know what I mean?
Yeah, exactly. Which is why, here at Direction, we're obviously paying attention to this. We don't have any plans to rush into that space. Our heritage isn't in active management anyway. There's a big debate if these are going to be, the next big thing,
yes,
or if they're going to be a flop, frankly.
Right.
In my opinion, they're going to, I don't know exactly where that's going to be, but it's going to be one or the other. I don't think you see a middle ground with approaches like this. Either people say, hey, actually, yeah, I still believe in active management in certain asset classes,
sure,
but I like the ETF vehicle because I can trade it intraday. There's some tax efficiencies. Or people are going to say, you know what? I like the control that ETFs have in my portfolio because they're passive, because they give me access to all new different markets and different sectors. And I like that either my advisor can build me a more robust portfolio or I can do it myself. So I don't necessarily need an active manager to do so. So we will see.
That's a great point, man. No, because you know what? I can see what you're talking about because there's plenty of people that have mutual funds that would like to get in and out of them every day, whether it's an IRA or anything else. Interesting, man. Well, Dave, it's always a pleasure. Thank you so much for the education, especially the China deal in a huge way. Look forward to speaking to you again.
Talk soon.
Thank you. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go over to the world of Carnival because what you just had coming across the tape a bit ago is that, I'll read this first, but let me get this up. Carnival Corporation. Which one is it? CCL. Okay, so this is not that bad. I guess it's been down since this coronavirus about this. So 51 to 43. And we pull this back. Okay, yeah, so you're down from 72. The bottom of this range out here is 39. So what has happened here, and you can imagine, the Carnival Cruise Line's Princess Cruises set up. Recent passenger in Asia tested positive for the coronavirus, prompting Japanese health officials to delay the ship. He's been on while they conduct a review of all the guests. Princess emailed a statement Monday that the passenger embarked in Japan on January 20th and disembarked in Hong Kong on the 25th. The ship, the Diamond Princess, then continued its round-trip journey and to ultimately take passengers back to Japan, which is near Tokyo. Bottom line, folks, is that you're going to see anything that has large gatherings. To me, particularly, not that I'm not a cruise. I've never gone on a cruise, actually. Been on a cruise ship, but I've never gone on a cruise. But bottom line is that that'd be the last thing I'd want to do now, because, whether you're on the cruise with 5,000, 6,000, 2,000 people at a time, guess what? You can't get off. Pretty intense. And we're going to see any type of transportation like that. Of course, that is a problem child. We get over and we take a look at United Airlines. United right now is trading up 47 cents. This is down, though, from 90 bucks here at 75. We pull this back here, and what you're going to see is that this also broke an uptrend. This broke the uptrend with conviction. I mean, the bottom line is that we know that this thing, is well, it wouldn't be a black swan event. It would be a black swan event in some industries, that's for sure. The airlines being one of them. The bottom line is that last week we went from 90 to 74, and once you got back into the 74 area, the risk is that this thing can get down to 56, and the bottom of that is 37. So pretty intense how this thing is shaking out. And you can see that that is set up technically. Fundamentally, it's definitely set up. I mean, what has happened is that if we go over to Delta and we take a look at Delta, Delta was the first airline that, bottom line, said, hey, listen, we're not flying in and out of China for 2 months, okay? I believe tomorrow, no, the 5th, okay? So it's going to be Wednesday. That's the last day. They're just bringing people that came over. They're getting them out of there. Bottom line, then they don't plan on coming back until April 30th, I believe. Okay, so you're talking some big numbers. Delta is still basically in pretty good shape up here. As I suspect cash flow is going to hit them all, because you're talking about some monster numbers. There's no two ways about that. We got to take a look at Apple. Apple out here on Friday took a hit downtown. First hit it's taken in a long period of time. Apple first off set a new high, and when it come out with those numbers, 327. Came off that. Bottom line, get down today to 302. You get some volume behind the move. You broke your lowest swing point from the 27th, and I suspect it's going to chop around a bit and basically do some sort of pullback to about the 282 area, because what you will have is that the supply chain lines, folks, okay, will, bottom line, well, here, I'll show you an Apple Watch. This is pretty cool. No, first I got to put up supply chain, SU. Supply chain, okay, SPLC. So watch this. AAPL, equity, SPLC. So what I'm doing is I'm pulling up what Bloomberg allows you to do. This is pretty amazing how this works out. They allow you to basically, you pull up a equity, and it will give you the main suppliers. Then it has Apple in the middle, and then it gives you the main customers. Well, when you take a look at Apple, what you're going to see is that if you're looking at the Bloomberg screen, on the left-hand side, you're going to see all the companies that Apple does business with. And I'm going to blow this up a little so you can see a little bit more. I don't know if I'm going to be able to do this without losing it. Well, if you even take a picture of it, you can do this a little bit later. Because this is what it does do. It gives you not only the companies, it gives you the revenue that the companies have. And when you're looking at Apple here, what you're going to see, in a huge way, how many of these companies are actually in China. And, there's a few that are not in China, but your majority is in China, okay? Then, of course, the customers on the other side, are all over the world. They're the largest, basically communication companies in the world. That's, we're talking Walmart, Sprint, Tech Data, Best Buy, Marbell, Verizon, you got it all. What's important to understand, though, is the left-hand side of this chart. And the left-hand side of that chart, you're going to have slowdowns, and it is what it is. And that, basically will affect the amount that they can push out quarter by quarter by quarter. Gold. Let's go take a look at the GLD. What you have with the GLD out here is that the GLD today rejected lower price. It's at the top of its trend. It's pretty impressive when you get a bounce in this market like this. Gold basically hasn't pulled back. The GLD is not pulling back. We had a high volume high out here from last week at 149, and that's saying bottom line is that actually, let me look at this. 61 million. Oh, this is cool, man. Hold it. We got this. Oh, so check this out, folks. So you have the gold contract, the futures contract, in a complex ABC structure on the way up. What it had done, taken out the B point, gave it up on price, back down. The GLD, I just checked this out. This isn't an ABC up, and it's a confirmed ABC up. We did, on a weekly, we did 61.5 million. You took out 61.3 million. That's going to give you 146, 120, let's call it. So you get 26. That's going to be 30, 46, 56, 62, 162. This is so cool. Yeah, this is, because that means we're going to get this 162, I just said, right? And the high is 185. The swing point is 174 to 162, man. Okay, that's October of 2012. Now, check this out. So I'm going to get this chart to October of 2012, but I want to show you something with the GLD, because it's at 148 when, of course, gold is up in the 1500s. And what that has to do with, the amount of fees that are inside the GLD. When the GLD first started, bottom line, it would be point for point with the gold contract. Now you get the GLD at the price point of, there we go. We get the GLD at the price point of 148.30, and the reason for that is that their expense ratio is 0.4%, and if you take that 0.4% and you see when the GLD started, okay, the GLD started trading in November of 2004. Bottom line, we're at 2020, and as soon as we come back, I'll bring you through the rest of this gold contract. Come right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow right now up 189, Nasdaq's up 128, S&Ps are up 27. We're talking about the gold contract as well as the GLD. So what you have happening here, folks, which is pretty cool, is this. The GLD's in an ABC structure on the way up, confirmed. That's going to bring you up to 162. And what you have happened there, of course, what I was explaining how the GLD trades at 10% of the price of gold, and you can see the correlation that gold's at 1577. Well, that would mean that the GLD should really be at 157, right? The reason it's at 148.34 is that it's been fee structure. It's 0.4% for 18 years. That's how that works, okay? That being said, guess what? When you go over to the GLD, then when I do the correlation, and I take the gold contract, bottom line, it's in a complex ABC structure on the way up, and we're always looking for an edge. Like, okay, what else can confirm this? Well, guess what? The GLD just did confirm this, because now what you're going, if we go to October of 2012, you're going to see the low of that is 1698, the high of that is 1794. Might take this complex ABC structure on the way up is game on. That's pretty wild. Let's go to Mike in Warsaw, Poland. Hey, Mike, what's going on?
Hi, thanks for taking my call.
Hey, so are you living over there now? I know.
Royal Dutch Shell.
Let me ask you something. Are you living over there now? I know you used to be from Toronto, right?
Yeah, well, I subscribed to your 2011 theory on the condo bubble in Toronto, and you know what? It finally sank in, and I decided to liquidate.
Good for you. Awesome, man. That's great.
I think it's a bubble, and I think it's going to crash.
Okay, so what are we looking at today?
Royal Dutch Shell.
Royal Dutch Shell. Okay, I got it here.
Yeah, am I catching a falling knife?
Let's take a look at it. You got these companies are in tough shape, and Royal Dutch Shell is in one of the toughest shapes. The low's $23.11. That's today. The high's $29. They do pay a 7.2% dividend. This has been a one-way trip for the last 3 weeks. We just went from 27 to 23. Let's bring this back.
No, it's RDS.
Yeah, it's
Class A.
Yeah, no, this is what I have. That's what I have up here. Now, so this is trading at the same price it traded in 1997. So the real question, Mike, is that, yeah, I wouldn't touch it yet. You know, if you're watching Tiger TV, you can see where my cursor is. My cursor is on the trading from January of 2016. Now, the high, and the reason it's on that, folks, that's the lower end of the consolidation. The high of that is 21, Mike, $21.39. The low is 16.52. So when you have something like that, I'd first, you know, if it backs down to the 21.39 and it rejects lower price, then you get some action. If it pierces that, you know, it's $5 that bar, which is insane for, you know, a $20 stock. So if you do get a full rejection, then I'd say that you get action, okay? That it'll stay in a consolidation, because when you get $2 lower, folks, this equity is going to be up to paying like an 8%, yeah, be like an 8.25% dividend. So these companies aren't going to go out of business. And in an environment that we're at 1.51 on the 10-year yield, a 7.29% dividend should bring some buying in it. That's what it comes down to. We'll see if that's the case. But I'd let that get into the top of that range. If it doesn't hold the top, well, then it's going to the bottom. And, I don't expect that it would break that bottom out. It'd be pretty hard to, blow away 1652 after coming down as dramatically as it did. You know what I'm saying? That's
right.
Yeah. So that business right now, this oil business, the oil contract itself, just so we all can wrap our head around this. This is at a basis right now that can break down another $5. We're right at that point. $50, right under 50.49 is a level where it's held a few times. When it doesn't hold, it seems like $45 is in a heartbeat. So.
Okay, so you're looking at January 2016 low.
That's correct. That's correct. Okay. Cooking, brother.
Okay, thank you very much.
Have a great one, man. Have a safe one. So Google's coming out with numbers right after the close out here today. And what Google does, folks, it's a split. It's 1/10 of 1 second, basically at 4 o'clock. So when I do the 4 o'clock update, we'll have these numbers. Let's see. When you're taking a look at Google, the bottom line is that we are up $46.58. You have a high out here that is generated 1503. And the way Google's trading, folks, my take is that Google's going to come out with some good numbers. 1503 is game, and we'll see whether we blow it away. That's what it looks like right now. Even when we came down on Friday, bottom line, what Google did not do is did not break its lowest swing point. And this is, the lowest swing point is 1421. Friday, we got down to 1428. And it had volume on the way down, but when you either go much higher or much lower, and you get an expansion of volume, but let's say on the way down you don't get to the swing point, that's showing that there's selling, there's buying rather in that equity. When you get to a much higher high, and the bottom line, you are basically pushing up there, and you have volume. Guess what? We know that's a break with volume topside. The way this is operating out here today, I suspect what we're going to see is that when Google comes out, they're going to have some numbers that the market's going to like. And Google's looking to take $38 billion to the top line. They're looking to take $12.50 to the bottom line. They're growing right now at 22%, and that's across the board, across the world. So if we go, let's go into the NDX, because what will happen is this, is that inside the NDX, Google is a very large part of it. The reason being, folks, is that what has happened is that, I'll bring this up and you can see how this works. When you're looking at Google, you're looking at it twice. You have Google, then you have the A shares. So bottom line is that weighting-wise, it's a large weighting inside the NDX 100. And if we go over and we take a look at this NDX right now, what you're going to see is that we are trading, we got up to 91.55 today. And this is pretty amazing. If you listen to the morning show out here, one of our tigresses, she nailed this in a huge way. It's pretty amazing that, if you look at these Fibonacci sequence numbers, the bottom line is that what the NQs did is that just got over the 0.618 retracement of the whole move down on Friday. Now, when you do that, folks, okay, that is a very strong move. It's particularly a very strong move when you can do it in one day. So my take on this is that we're below the 618 right now, but that being said, I expect what you're going to see out here, particularly because if you're looking at the 10-minute, what you're going to see, when we busted that 0.618 in the way up, you have volume up there. More than likely what we're going to see is that when Google comes out with numbers, we're going to see decent numbers. You're going to see the NDX 100. Bottom line, try to basically get up into these highs once again. Today, inside the NDX 100, the strength is Tesla. It's up 19%. 19%. That's like hard to comprehend. It looks like Tesla is going to run it right into the close. Right now, you're at 775. You get Baidu up 5.7%. Gilead Science is up 5%. JD.com is up 4%. Taken away from it, Electronics Arts down 2.8. You get Align Technology off 1.5, and Comcast down 1. So there's going to be some decent action coming into this market right at 4 o'clock. Dow Industrials right now are trading up 148. The Nasdaq's up 112. The S&Ps are up 22. We're coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 133, Nasdaq's up 113, S&P's up 21. And folks, as you come over to our website at TFNN, right under featured content, bottom line, you're going to see our man, Mr. Basil Chapman. He is going to be doing a live workshop for his subscribers, February 13th, dark cloud cover, an essential market analysis. Basil's got a great newsletter, great show, folks. Real easy to get into. Just come over to our website at TFNN. You just, bottom line, you're going to click subscribe. You can get this for a month, 3 months, 6 months. It all comes with a 30-day money-back guarantee. Everything to win, 0 to lose. You know, one of our other Tigers, Jim from Minneapolis, taking it by storm. You hear that out there on one of those promos. He just came across, and this is so cool, man. Thinking of it, and his quote is that the bottom line is, I suspect that Tesla is getting ready to do a secondary. So what is a secondary, folks? The secondary is that you push more paper out into the marketplace. And in Tesla's place, there's no doubt, Jim, thanks for sending this over, because this would be the time, folks. The bottom line is that we have just gone from 251 to 780. They could push the secondary out. And the way a secondary normally works, they wouldn't get the top price out here, but they'd get pretty close to it. And they'd basically take in a huge amount of money pushing shares out at this particular time. Elon has got to be very happy. There's no doubt about that. As I said a little bit earlier, when you're talking about a stock that's up $130 and you have 34 million shares, that's even, I had calculated $3.4 billion when I got on the air. It was up $100. Bottom line is that it's probably catching $4 billion in one day. And Musk does own 18.9% of the company. So you're talking about a very large number. And, you know, we'll see where it shakes out. What we do have inside the S&P is that you get the bounce going, dramatically lighter volume. We're in window dressing. Bottom line, what I expect we're going to see up here, yeah, you might get a little bit. I expect the NASDAQ tonight to get higher. We'll see how the S&Ps, if it can follow it. But guess what? This is, to me, is a counter trend bounce. You get a little bit higher, and then we're going to see at least a test of the lows of last week. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, a safe night. Come back and visit us right here tomorrow morning, 8:30. Go get them, folks.